It's Friday Coffee with your mortgage man, Eric. And here we go. So today, we're going to follow up from the last video I had, which we were kind of going through the differences between a mortgage banker and a mortgage broker. And so through that, I've been asked, hey, Eric, can you give me an example? Can you dive into the weeds? Give me an example of something that has happened, the recent file, a scenario, where you had to come to the rescue, if you will. So here we go. I'm going to dive into the weeds. Might get a little technical, so pay attention. Here we go. So this file we ended up closing last month in the month of August, and this was one of the loan officers that I managed. So it wasn't my file, but I had to get involved, and here's why. So one of my LOs, she had a file that was contingent. She was representing the buyer, where the seller of the home had to close on their home, right? So they could buy this home that my loan officer was helping them with. Well, we were on the second extension, and I'm like, something's wrong. I was like, you need to get involved. Something is wrong. They're asking for a second extension. Something has gone off the rails. We need to find out what's going on. So we dive into it. The person that was representing the buyer who was buying the home that our buyer was selling is a mortgage broker. So let's dive into this scenario, this file. This file is a USDA loan, okay? So USDA, much different than FHA. It's kind of a quasi-hybrid. It's kind of a conventional loan mixed with an FHA loan as far as some of the guidance, policies, guidelines. It is tricky. Now, the underwriting system that is used, the automated underwriting system that is used for USDA loans is called GUS, Government Underwriting System. It's not a friendly system. It's not a user-friendly system by any means. Whereas FHA, VA, conventional loans, you can use what we refer to as DU, desktop underwriting, or LP, loan prospect underwriting. And LP is for Freddie, DU is for Fannie. GUS is strictly for USDA, and it's a pain in the rear to run it. But you, as a loan originator or loan officer, should be running them before you send somebody out shopping with a pre-approval, right? I think every realtor, real estate agent out there would agree with me that is crucial. This obviously did not happen in this case. So we get the realtors involved, the agents involved, and said, look, we will give your buyer a second extension if and only if the buyer is willing to go through our company to have the loan done, because something has gone awry. Something's amiss here. So we get our hands on the file, and here's where we're at. We have a 637 FICO score, okay? Now, again, if you know anything about USDA, you need at least a 640 FICO score in theory to garner a GUS approval, an automated approval. And most often, you're not going to get an automated approval on GUS until you're into 660 range, sometimes even 680. It is finicky. It is touchy. It's sensitive. So I'm like, wow, why would this loan officer, this mortgage broker, send somebody out with a pre-approval with a 630-something FICO score on USDA? Because we are now into manual underwrite area, which we can do. Brokers, if you remember my last video, brokers are not so good in this area as far as doing manual underwrites because they got to send it to a third party, right? A wholesaler. And they're just a middleman. You don't know the underwriter. You don't talk to the underwriter that's involved, that's going to do a manual underwrite and put their license on the line for your loan. Keep that in mind. That's what an underwriter does when they do a manual underwrite. They're basically saying, hey, I know that the automated system is giving you a denial, but we're going to override the automated system, do a manual underwrite, and give you an approval. So the underwriter's license is on the line when this happens. Keep that in mind. So 637 FICO score. Then we find out from the consumer that this mortgage broker was fooling around with trying to get an expedited dispute done on the credit score to get it up over 640 for like 3 weeks. I'm like, oh my goodness gracious. With the consumer's credit, it wouldn't have mattered. You wouldn't have gotten approval, an automated approval with where you're at. Nonetheless, all that time wasted, so we take the file. We also saw that the wholesaler that this mortgage broker was using cut this borrower's income dramatically, and that's probably because they didn't want to do the manual underwrite. So you got to stay underneath a 41% debt versus income ratio when you're doing a manual on a USDA. So, they had this borrower at like a 43% on the back end, 44% on the back end as far as debt versus income ratios. We get the file, order the VOE, pay stubs. I'm like, this doesn't make any sense. Conservatively, our income should be a lot higher. So we went on a conservative direction with this, and we were at a 34% on our debt versus income ratio. So look, this is just the wholesaler basically saying, we don't want to do your loan. And which is normal, right? I mean, again, back to the mortgage broker world, these wholesalers, they don't want to do manual underwrites. That's just not their forte. That's not what they do. But here we are. We have a mortgage broker that sent out a pre-approval in an ill manner that is now scurrying and, in a panic and a frantic here, trying to get this loan across the finish line, and it just wasn't going to happen. Not with the wholesaler that they had this placed at. So we took the loan, we worked with that wholesaler on getting the appraisal released. They were at least nice enough to release the appraisal, give us rights to the appraisal, so we didn't have to waste another $475, $500 of the borrower's money who didn't have it. Thus the reason why we're doing 100% financing USDA loan. So there was that issue as well. Now keep in mind, at this point, the buyer, the consumer is so frustrated, wants to just throw the towel in. It's just done, it's spent, has been through an emotional roller coaster ride because of this, right? So not only are we coming in to save the transaction, but we're trying to keep them calm and let them know, no, we can do it. We can do this manual underwrite. We will get this done. We need an extension, another extension, granted, to get it done. 20 days later, we end up funding the deal. And we did it. USDA, manual underwrite. We communicated with our underwriters to get this thing across the finish line. And that's just one example that we see on a monthly basis, what's in our pipeline, on where a mortgage broker can't do the transaction or they fail at the transaction. And look, this is very similar to what would happen at a big bank. I just want to let you know that as well. So if this transaction was at Wells Fargo or B of A or some huge bank, they wouldn't have done it either. They would have found some reason, because they're not good at manual underwrites. It just is what it is. So this is one of those reasons why a real estate agent, realtor, will want you to use a direct mortgage banker, mortgage lender to get your loan done. Because we have the capacity to do those things and to maneuver and ask for a rush in this last minute, right, and do a USDA manual underwrite. Now keep in mind, in that 20 days with USDA, keep this in mind if you've forgotten, when the loan is done, it's got to go to USDA to get the stamp on the file. There's another 3 to 4 business day waiting period. So the loan's completely done, underwritten, done. You're fully approved. We're ready to send closing loan docs to title. Time out. It's got to go to USDA, our local USDA, which is in Prescott, and wait in line for them to put the congressional stamp on the file that they're USDA approved to get USDA monies. So keep that in mind as well. So those 20 days, 3 to 4 of those days were eaten up by waiting in line up in Prescott at USDA. So there's a perfect example of why you want to go with a mortgage banker versus a mortgage broker when you're involved deep into the weeds with these loan transactions. Look, not every loan transaction that comes across, right, is putting 30% down with a 745 FICO score and a loan amount of $300,000, right? That's just not the reality that we live in. If you get one of those deals, God bless you, right? You were very fortunate. That loan will walk itself through the system, and it wouldn't matter which institution you use for lending, it will go through any system. But if we are true to ourselves, that is not the majority of what happens out there. That might be 20%, 30% of the files that come through our pipeline on a month-to-month basis. With that said, it's Friday Coffee with your mortgage man, Eric. 602-757-2171. Have a great day.